Hello, everybody. Good morning. How is everybody?
Good morning, and how are you today?
I'm good. Have no complaints. Feel better than I did yesterday. So that's good.
Did you feel bad yesterday?
Yeah, like I said, I was dealing with something in stomach issue over the weekend.
Oh, yeah, I remember
Right.
that.
Yeah, I'm
Yeah, the old
getting to that
stomach.
point in my life, certain things I can't eat anymore.
Yeah, stomachs
Yeah.
don't work the same. The older you get, you're like, man, I used to be able to eat that. I'm still
Yeah,
going to eat it, but I'm going to pay for it later.
right. I'm becoming a vegan.
Yeah, I hear you.
If what is those people are like if it's been growing near a hedge or something, I can't eat that. I'm like,
Yeah,
what? So
I got it.
all right, well, let's get rocking.
Rocking and rolling. Yesterday, interesting day. Okay, we everything gapped up. Yeah, I mean, just about. If you look at the the
It's just
stocks, and I looked
popping
at
in there, yes.
I looked
Okay.
at the stocks we had on the watch list, and it's almost impossible to have bought in yesterday because, with the China news right before market open, and it popped everything up. And then we pretty much, we were watching the S&P and the other indices, and they pretty much closed about where they opened. So it was interesting. It didn't fall back down. And you can see today we're looking at, kind of a flattish half a point on the Dow down, and flattish on the S&P and the Nasdaq, and you can see why, because you go look at the Mag sevens are now, a lot of them are above the 200, and you're seeing that reflect because of their market cap in the S&P and in the Nasdaq. So again, let's go take a real quick look. Get rid of this one, and let's take a look at what it looked like yesterday on the heat map, and you can see mostly all green. We did have, some issues over here in telecom with T-Mobile, Verizon, AT&T, Netflix, Spotify were red yesterday. Utilities were red. Okay, and then we had some red up here in consumer defensive, obviously, but everything else looked pretty green for the most part. And let me get rid of that one. And we'll take a look at some charts. I call this basically the Bollinger Band bizarro world market structure from yesterday. Everything gapped up pretty much to the Bollinger Band, and we'll see what happens. We're flat. We're supposed to have the CPI out, so Trent, if you could kind of watch for that, see what happens. I think it comes out right about now.
Okay.
But with the S&P, we finally breached the 200, went right up to the Bollinger Band. This is where we're going to open today. So I want to see if this can hold, if we get a a bounce back off of the 200, or if we close below what we're going to open above, and we'll see what happens today. We got the CPI, then we have the PPI later this week, and a lot of manufacturing reports. But I want to see this kind of bounce back off the 200 and make sure it holds, and take a look.
Mark 2.3. Annual
2.3.
inflation rate hits 2.3% in April, less than expected.
Okay. All right. Well, there you got it. So that may affect our markets, pre-market too, and
Yeah.
so again, inflation seems to be coming down, even though at 2.3, that's still going up. If you think is that month over month, I think, Trent.
Let me double check.
Okay, but
It says consumer here's the consumer price index was expected to increase 0.2% in April for a 2.4% annual inflation rate, according to Dow Jones Industrial Average. So it came in under by
okay.
10 basis or 10 basis points.
But basically, I look at that, and we still have inflation. We just have less of an increase because we still haven't gone down at all since we bopped up to 9%, a couple of years
Yeah.
ago. So we're still seeing inflation. The Qs, again, I call it the upper Bollinger Band bounce from yesterday, because everything gapped up. we went, we were having trouble getting above the 200. Again, boom, right up to the upper Bollinger Band. Here's where we're going to open today. Oscillators look good. And even the Dow played in the party. It got up, and look at that, bounced right up above the 200. It's right where the sell orders were, and then you've got the intermediate resistance level right above that. So interesting on the Dow, on the S&P, and on the Qs. And I want to see if that's going to hold today. Remember, it's how the market closes, not how it opens, to see what's going to happen. But the Dow, after a long time, sideways moved up, even without all the mags within the Dow. We look at the dollar, jumped up.
Bye, baby. Have a good time.
Jumped up
Okay.
yesterday, even above the 50. We're going to open up just a little bit lower, right about at the 50 on the dollar. Gold took kind of a beating yesterday with the market going up, and gold fell down. Looks like we're going to open just a little higher on gold today. But again, following right along the intermediate resistance level. Bitcoin's now, trading in a range. It got up here to the next resistance level and hit. It was following its upper Bollinger Band, 1, 2, 3, 4, 5 inside. You just normally don't see more than 5 times outside the Bollinger Band, pulling back in. Today it's up again today, and we'll see if it gets past this resistance level. And we always try to back out just a little bit and see, here's the all-time highs back here, and we're getting closer to those on Bitcoin. So Bitcoin has been pretty resilient when you look at, the market in general. We'll see if it still disconnects or just keeps going. But again, there's only 21 million of them. And right now, a lot of sovereign wealth funds, a lot of countries, a lot of companies are buying up Bitcoin for their treasuries right now as a store of value. And then, of course, MicroStrategy, if I can get this to come up. MicroStrategy has been hitting right on its intermediate resistance level. We'll see if Bitcoin can push it up above that, but for the last 3 days, it hasn't been able to, but hasn't lost too much either. We got the 9 kind of flattening out. And Steve, when you get this 9 up close to the resistance level, then you see it start coming back down, and that's usually squeezes price down, but it hasn't happened yet. We'll see what happens. We're seeing a little bit of a roll in the MACD, so just be cautious if you're in there on a trade. I would have been out at the intermediate resistance level according to my trading plan. NVIDIA. NVIDIA hasn't quite made it to the 200 yet. It's heading that direction. We're going to open a little bit higher, but again, here we are right at the upper Bollinger Band. It just, these gaps went up to the upper Bollinger. Some other strong ones. You're starting to see some strength now in some of these that are pushing the indices up. One is Meta. Look at Meta right up to the Bollinger Band again, gapped up, going to open a little bit higher. This one, it's over the 200, it's over the 50, it's over the 20. If you like to buy on the Bollinger Band, you believe in the momentum, this has some room to move. Let's see where the sell orders are. We got to put this above now that we're going up. So sell orders, above this are at 674.62. So again, I don't like buying on the Bollinger Band. Most people don't. They use it. But, if it's riding it and you believe in the momentum and it meets your trading plan, you've got some room on the top side. The other one, Tesla, has been strong. Tesla finally got past the 200. Again, we talked about that the other day. And then, of course, yesterday, Bollinger Band right above it. We're going to open right about where we closed. You got sell orders at about 341.59. So we're starting to see these Max 7 starting to roll, which is bringing up the indices. Amazon is another one. Look at Amazon gap. It went way beyond the Bollinger Band. We're going to open about where we closed. But again, they opened high, like we said, and then came back down, like we were talking yesterday. So the people who chased them up and got at the high, they lost a little money at the close unless they got out, and they still probably lost a little money. But again, you're outside the Bollinger Band. You could run outside the Bollinger Band, but only 5% of the time do you have price action outside of either side of the Bollinger Band. But again, an upward run. There's 3 Mag 7s that are moving right now, and those are the three. We look at Microsoft. I guess there's 4 Mag 7s that are moving. Microsoft has come up, and now we've hit some resistance. We'll see if it can pop past it. Right now, it looks like it's going to open below resistance, and see if resistance uh, keeps it from moving up. We have some sell orders a little bit above it. A lot of times you'll see price go up, hit the sell orders, come back down, and retest underneath resistance. So Microsoft's also helping out. Big gap here. Okay. And Microsoft really didn't gap too much yesterday. You can see, not like everything else did. And actually, it opened and closed up, where you're seeing a lot of stocks yesterday. It opened up and closed down lower, but still higher, if you know what I mean. Google has a lot of lawsuits out there. Did gap up, going to open about the same. Couldn't get past the 9. Okay, still way below the 200. So Google's just having some issues, and with these lawsuits out there, we'll see what happens with Google. And a couple others you guys like. Palantir. Palantir's, kind of come up, hit this resistance, went up to the sell level on the where we found sell orders right at earnings, pop back down. We're still rolling right along the intermediate resistance level. You can see this 9's come up and got real close, and a lot of times, not always, but a lot of times I see that come back down. It just pops down. But we'll see what's going to happen today with momentum. But that's a pattern I'm used to seeing. We're really close between resistance and the sell orders too. Starting to see some of the upper Bollinger Band kind of flatten out also on Palantir. So just be careful there. Netflix is one that went down. And here's kind of an example of what I'm showing with Palantir. They kind of go up. You get resistance right next to the sell orders. You get the 9 squeezing on the resistance, and then it just pops down. And a lot of times that's the way it happens. You've seen the oscillators kind of go down on Netflix. Netflix rode the recession theory up. Everyone's going to stay home, but I'm not giving up my Netflix. All of a sudden, everything is cool because China and the U.S. are talking, and no recession talk, and we're going to hit 6,500 on the S&P. Everything's good. See you later, Netflix, because we're not staying home. We're going to go out to dinner all the time now because everything's good. So, that's the news. And Spotify was another one that got, right along the intermediate resistance level. You're seeing the Bollingers kind of flatten out. Again, here's the 9 touching up right on resistance. And then you see it kind of pop down. We'll see what happens if there's any momentum, but it's underneath the 9 now. We're also seeing the oscillators kind of turn on that too. Switching to some of the stocks on our momentum list. ASM, this is the problem with some of these, all of a sudden yesterday you have resistance. You can see we came up where the sell orders are, and then we closed down below resistance. So again, the momentum may be done with ASM. Another one, AHR, was on the list, and it also had the intermediate resistance level came on. It wasn't on. That's why it was momentum. Again, 2 days in a row, you're seeing it hit resistance. Again, that's an area where I would be out on my plan. It could go up. You might hit some sell orders, but again, I don't play past this line here because it's too risky for me personally. SSRM, this one just resistance came on after it was going up in a momentum up, and then it came on and it closed down below the 9. So this one's off the list too, but we still have some that are on. You can go take a look. I was looking at one that Patrick from London. This has just been on fire since he's brought it up. MELI, it's a European company. I believe it's kind of like Amazon or something like that. But yeah, no resistance level at all now. So it's really turned into momentum stock. Right along the Bollinger Band. You got some sell orders right above it at 25.86. I think when Patrick brought this up, it was something like $1,900. Again, earnings kind of dropped them down, but then it popped up after the earnings. So that was one of Patrick's in there. So yesterday, because everything popped up to the Bollinger Band, it was hard to get in on anything if you looked at our watch list. But some of the ones we were already in. So had you stayed in, like here we are at APTV, you would have had a nice little gain yesterday if you had stayed in. a lot of people probably would have got out at the, I would have maybe at the 200 got out because it would have been a nice game. But had you stayed in, this would be up $11 since we put it on the watch list, last week. STX, Seagate, we put it on the watch list back here, right at earnings when earnings came out. And it's gone up and probably would have got out at the 200, but had you stayed in and trying for the resistance level, you'd be up maybe $18 on that one. I would have gotten out at the 200 and stayed there for a little bit, but I'm less risk adverse. SWKS was another one that we've had on our list for a while. This one gapped up. Okay, we got in back at this level. If you were still in, this one still has a nice run. It went above the Bollinger. It was the Bollinger Band breakup yesterday, and we'd be up about $11.52 from that point. And these are under the 200 stocks. Okay, so you can make money on them, but you got to realize there's a higher risk. And then the one that Margaret took out yesterday, the Boot. Okay, Boot came up, and I think she got out right about the 200. Had you done that when we put it on the list, this would have got you about $22.26 on this one before you got out. So again, if you were in yesterday and you rode that gap up, I mean, you can see above the Bollingers and got out, it was a good day to take some profits for sure. On our watch list, we had IONQ. This one's was on for a while. Okay, and it's just riding up from where we started. This one's up about $6, since we put it on the watch list. ABGO. It'll come up for me. There we go. Move it back a little bit. Put it on the watch list back a ways back in here. Here was our gap up again to the Bollinger Band. Had you been in that one and stayed in it because there was no reason to get out, other than if you wanted to get out before the weekend, this one would have got you about $29.27 since we put it on the list. We were looking at this last week. 3M. Yesterday, I would have gotten out. I would have had something set at the intermediate resistance level. And had you done that, we would have been out about $9.24 up. And I'm going to show Honeywell because that was Bob's. And what happened with Honeywell is the intermediate resistance level calculated back up. Remember, yesterday was pretty close underneath where we were seeing sell orders, and now it's popped up. So Honeywell did well yesterday, popped up, and it still has a little bit room to run on that too. So that's about my time. But I just wanted to show, it's hard to get in if you are looking to get in. I mean, JPM, if that's on the list, the way it opened up right up here, but it closed on the Bollinger. So if you chase that up, you would have been down for the day. So it's hard to get in. So follow your trading guidelines. Mine says, I don't like to buy on the upper Bollinger Band. I like to buy, between support and resistance. And see, that went up like we were talking. I said it was probably going to come back down, and that's what it did. So it's hard. You don't need to buy every day. And on these big gap up days, it's hard to chase.
That's why I'm having cereal.
It's hard to chase them. Like here's Goldman Sachs. Okay, this one opened up, right below its resistance level, or a little above the resistance level, and ended up below it. Okay, so it's hard to get into that one. Morgan Stanley, same thing. Okay, right up. This is where it looks good, but then when it opens, you're way up here. You're like, okay, that doesn't look as good as it did down here, so I got to pass on that one, because it doesn't meet my trading guidelines. DLTR. We talked about Dollar Tree. Okay, Dollar Tree opened up and then right on the intermediate resistance level. So do I like to buy that high? No, I don't. I'd rather buy down here, but it's on the list and you're saying, okay, I'm going to wait and see if I can get it. And it goes up and you're like, okay, this one here, depending on your risk tolerance, has some room to roll. You've got sell orders just above it, and you've got, the resistance is way up on top. So, would I buy at this level? Not on my risk tolerance. I'd want to see it come back more towards support and move its way out. So I got a bunch of these that look like this. Everything looks like that yesterday for the most part. So again, it's hard to get in when it gaps up, 3-4%. and and then it closes at 4% or 3%. So again, that's where we are. But the ones that we had in from last week, they did well, and if you were in it, you're up, anywhere from $6 to $29. So that's all I got, Trent.
Okay. I'm gonna hit on two things today. Yesterday we talked about risk management. We took a look at what is if you had zero gains and you ran stops at different levels, how long would it take you to deplete a $10,000 account with 12 positions in it that you kept on reinvesting in? And it was pretty, substantial what how long you could last with a 7% trailing stop. Today, I want to hit on another part of risk management, and that is asset allocation. One of the biggest things that we've all heard is diversify and don't put all your eggs in one basket. And I believe that is true to a certain level. And today, I just want to give you a general intermediate to long-term asset allocation maximum position size per investment based on the category of investment. So when you look at this chart, I've broken it down into fixed income, equities, commodities, and options. I did not put currency in there because we don't talk a lot about currency investing, and that's sort of a whole nother level. But when you are allocating to like a fixed income position, so like TLT, IEF, AGG, or HYG. Let's say you saw an opportunity in the bond market in all different segments, and you wanted 4 positions in fixed income. And what this is suggesting is that you have a max of 10% in any one position. So if you had 4 positions, let's say you had a conservative side more on the say the IEF, which is the 7 to 10-year U.S. Treasury ETF, you'd have a max allocation there of 10%. You wanted some corporate exposure, that would be AGG. That's the Lehman Brothers Aggregate Bond Index. I think they may have changed that Lehman to something else, but that's the old school way. You'd have 10% there. High yield debt, so maybe you go with HYG, you would have maybe 10% max there. And let's get some emerging market debt. I don't know exactly the symbol for that, but some version of that, you'd have max 10% there. Now, this would be based on if you believe that your technicals, like I use the intermediate trend line that I've created, the 62 period, you use the 200. If these ETFs were above those levels, I would then start to dollar cost average in to my maximum allocation of 10%. So let's say I have a minimum allocation in fixed income into 4 positions of say 1%. As I break through certain key technical levels, and let's just use the 200 as just the baseline. Once I break through that, I see a retest of the 200 and I see support and I see some macroeconomic data that supports a rally or a move higher, money moving back into the bond market. I would then maybe start to dollar cost average in, say at a 2%, additional each time until I'm full allocation. And then I would use my technicals to ride that up until it peters out and then start to dollar cost average back out of it, preserving profits. Now, with equities, most people here are investing in equities. And this is where my first glimpse of over allocating to one equity or one company was when Bell South, if you all remember Bell South, which was a telecom company in this, when the Bell organization got split up because of antitrust laws, they broke up into Bell South, and Bell South employees usually put 100% of their 401k into Bell South stock. Well, where is Bell South today? It no longer, I believe, exists as we know it, and those people lost an enormous amount of money. So allocating anywhere from no more than 8%, especially if you run like a 12 position portfolio like my the 12 that I have an allocation based on market cap I would allocate no more than 8%. Yesterday was a great example of a lot of the stocks within the 12, but also, and I'm going to show a chart of this, of Kerry's positions went from intermediate risk off, so below prices were below my intermediate trend line and below the 200 to above those two places, and we've now seen those become a opportunity. And I look at that and I go, okay, this is great. If I have a minimum allocation of say 1% or 2% to any of these positions as a confirmed support, I then start to dollar cost average back in to my full allocation. And let's say it's a max allocation of 8%. So that way, if let's say well, ASML is one of my positions, and let's say it's above my intermediate trend line, it's above my 200, and I've got a minimum allocation of say 2% in that. As it confirms that support and then it starts to move higher, I then maybe allocate a percent or 100 basis points or 200 basis point at a time until I meet my full allocation to that position. And then I let it go and I let it ride up. And as long as the technicals confirm that continue move up, I get that exposure. Now, when that peters out, we start to see a downturn and maybe it starts breaking through the 15, which is my trade trend line, and shows some weakness. Maybe I take off 100 basis points of my allocation. And then if it breaks then through my intermediate trend, maybe I take off 200 or 300 basis points off until I'm down to my minimum allocation. It's the same way with commodities. If you're buying copper or lumber or platinum or any of these kind of things, same process. Those get a more of a 4% allocation because of volatility and just gyrations that could whipsaw you in a way. If you are investing in options, 1 to 2% of overall capital is a way to minimize risk, but add alpha to your overall portfolio. But I think for most of the people who are here on this call, the fixed income and equity side is that area where most people play in. And so this gives you a guideline of, and I'm not talking short term, I'm talking intermediate to long term, but on the short term side, allocating 100% to one position without some sort of downside risk stops or trailing stops can blow you out really quick. And so from both short-term and long-term mindset or investing process, have a allocation maximum and have an allocation minimum. If you truly believe in the fundamentals of a company, then you should, and you have commitment to it, have a minimum allocation that you want to commit to it. Now, if it's just falling off a cliff, like we've seen a handful of these companies, possibly waiting for a technical indicator that gives you a baseline or a foundation to build upon is then when to start putting in your minimum. But once you've met your technicals support and you see a more of a bullish move higher, start to allocate to your maximum position. The key about asset allocation and money management is you're constantly looking for value, you're constantly looking for risk. And so when you see these money managers, they go about and they adjust their positions in a lot of cases on a day-to-day basis. For those who are more of a trader fund, they're adjusting those throughout the day in their allocation because they're managing their overall risk. But this gives you really a guideline to say, I've got an intermediate to long-term portfolio. I don't want to, for some people, they feel safe in dumping everything into maybe a handful of companies, but having some level of downside risk protection is very important. Asset allocation is a start, a trailing stops or stop losses is your second stage. Tomorrow, I'm going to talk about how to calculate trailing stops, both from a short term, but also an intermediate term, and give you some different ideas of how to do it. Payment, I was requested to take a look at the bus portfolio idea. I'm going to actually show you one thing because I know somebody's going to ask about it. And that is the volatility, the VIX index. As we can see here, this has been a dramatic move all in a matter of since March or February, yeah, March 28th. We went from an investable bucket in the VIX, the volatility, to a peak on April 7th at, was at a high of 60. We're now down, we're looking to open at the VIX at 17.99. So we're below that 19 line where which is the difference between the chop bucket and the investable bucket. Volatility is suppressing. Market makers are very neutral right now. So volatility is going to suppress, and chances are we're going to continue to see tactical funds who are based nothing on fundamentals, they just base it on mathematics and volatility, are now going to continue to see a buying up, continuously adding to their risk on positions. So keep an eye on the VIX. I think as we get through this month, we could see the investable bucket be the primary area where we are. As I've always said, if a tweet or a news headline could blow this thing through the roof again and put us in the chop bucket. But I'm becoming more and more bullish as long as we continue to come back and test these support levels that a lot of the stocks have made, made breakthroughs, the intermediate and long term. Yesterday, to give you a prime example of how concentrated the overall move yesterday was, 37% of the S&P 500's move was because of Apple, Amazon, Meta, NVIDIA, and what's that fifth one? Did I say Microsoft?
No, you didn't.
Meta.
Microsoft.
Microsoft. So there's 5 companies that represent 37% of the S&P 500's move yesterday. As you can tell, we're still very concentrated. And if you're asset allocating, that concentration made a major move for yesterday. So think about your asset allocation, think about your risk parameters, think about today. We hit 38 or 5,800 on the S&P. And this is interesting. I don't know if you all saw this on my post on the Discord, but what we on Friday in the last 5 minutes of the day, somebody came in and bought 5,800 call options on the SPX, and then for expiration yesterday and expiration on Friday or Wednesday, and they spent $1.6 million on those call options at an average price tag of 20 cents. They cashed out early in the morning, just after market open, with $16 million, or a $14.8 million profit. Somebody had an idea or had a high probability a deal was going to be made based on China's need to make a deal, based on Trump's ratings and his stock market performance in the last 100 days. They had a high probability belief that they were going to see a move. So today's move and tomorrow's move, we want to see confirmation before we start over allocating our intermediate to long-term positions for our intermediate to long-term portfolios. Payman asked about yesterday or the bus portfolio. So this is a list of all the stocks. I am missing his biotech companies. I will add that into my list. I'll start putting it out there. But I wanted to just give you an idea. This is going from 3 companies being above my intermediate trend line over the last month to now quite a few. And also quite a few of them have broken over the 200. And so this is just to give you an idea how to read this. My intermediate trend line is my line in the sand. I look at the world in quarters because we report quarterly earnings, we report quarterly government numbers and economic numbers. Things just think in quarterly periods of time. And so I take a quarter of the number of trading days in the year. So I think there's 252 trading days in the year this year. And I split that into a quarter, and that's my intermediate trend line. The 200, I use that because Marcus taught me that, Paul Tudor Jones has taught me that. Anything above the 200 is optimistic and potentially bullish. Anything below it, nothing really good happens there. So I use my intermediate trend line as my baseline. But what I'm seeing is, because of the last week, 2 weeks of this move higher after this major flush since the beginning of March and the Liberation Day tariff implementation, and now we're seeing that pulling back and some organization becoming coming to fruition there. We're seeing a lot of Kerry stocks moving into the higher range. And so I take the top ones that are above the intermediate trend line and I list them here, and I'll start putting this out on a daily basis for y'all in the newsletter. Because I believe it is a powerful tool to look at Kerry's companies that he's watching, that he likes, and to be able to put a simple technical approach to it. Fundamentals are very important always, but also take into account we are all still a headline-driven market, so take that into account. And as you allocate to some of these companies, and I would encourage you to really take a look at how many companies you're allocating to. If you look at a mutual fund, a typical mutual fund will have anywhere between 200 and 300 companies in its portfolio, basically a diversification to mediocrity. And the reason they have to do that is because they can only have a max allocation in most cases of 5 to 6%. So they just got to go find something to put money in. And when you're running a couple $1 billion hedge fund or a mutual fund, you start to buy companies that maybe you're not so excited about. You, on the other hand, have the ability to say, I can keep up with, say, 10, 12, 15 companies, and I can really dive into all aspects of those companies, and I can better risk manage around those companies and make better money by having a smaller concentration there. So right now we went from 2 to 3 companies that were above my intermediate trend line, showing and above my trade trend line, to now I think we've got what looks like 16, 17, 18, 19, 20 companies now that are fitting that category. I would encourage you to go and study those companies and you decide what companies fit your investment process best. So overall, Kerry's portfolio, his watch list all of a sudden turned on a dime. That has a lot to do with the industries he's in, and that's AI-driven type company. So that's what I got for you. Any questions, comments, subjects you guys want to bring up?
We have a few charts that somebody wants to look at. Let's roll those real quick, and then
Mark, before you get started, where is that chart, that table located at, Trent? I can't find it.
Yeah, because I pulled it a couple weeks ago because of a discussion Kerry and I had about I love my dad, but sometimes we don't agree on things. But I will be popping it back up there despite. Yeah, absolutely. I think it's a powerful tool. I have spent a long time developing it, and I'm finding it works. So Margaret's suggestion or indirect suggestion, simplify it. And that's what I'm going to do here, just to make it easier for you guys.
Perfect,
I get into the weeds, and I love to get into the weeds because I love chaos. So anyhow, I'm the guy who slows the traffic up when there's a car wreck. All right, I'm that guy. But I will simplify it, and I'll start putting it up, and I'll put it in the newsletters as well every day. Okay.
Excellent. Okay.
All right. Yeah.
okay, a few stocks up there that Esther had a few she wanted us to look at. This one I've not heard of. Brady, non-voting Class A, had a nice run. The thing that I noticed right away, Esther, is the volume is really low. If you look at this number right here, as I scroll across, 166, 159, 152, 156. When you're trading, it's hard sometimes to get a bid or an ask because they're so far apart. You know, your bid and your ask could be off by $1. And so if you need to get out of something like this, it's harder to do. So I like to have at least a 500,000, on average volume per day. And then you're coming right up on the intermediate resistance level, just right above there. So, it depends on your particular trading plan and risk, but it wouldn't fit with me. The other one you wanted to look at was LPLA. If I can get it to go. Here we go. LPLA, you can see it's had a nice run. I don't know where you got in on it, but it's coming up. It's outside the upper Bollinger Band, and of course you have the intermediate resistance level here, and I've showed you a million times of what usually happens here. You could get up above a little more. You've got some sell orders at 392. This is at 384. You closed at 376, so a little bit up to go, but again, you're outside your upper Bollinger Band. Had a nice run. If we'd gotten in probably back more in this area here, that would have been a nice run. But it's, your risk is greater than your reward at this point, in my opinion, just because of this line here. But it had a nice run. Paul had a APH to look at. Yeah, APH is Amphenol. It's a connector company. It used to be one of my suppliers. Nice run between the support at the 9. You got some sell orders up here at 86. Again, more of a momentum stock, no resistance level showing. You know what can happen at any time, but it had a nice run for sure. But just be careful. It's got some nice oscillators. Then he brought up under the 200 CRM, a couple of these out there. CRM is going to come up when it's going to test the 200, and we'll have to see if it can get past that level. And you see the sell orders, the market is assuming that that's going to be a stop. You might get a little bump above it. You got a lot of sell orders right next to the 200. But if this can get past that, you've got some room to run up to resistance on CRM. But again, this could be a tough level of resistance to hit. But with the market and the news driven, we saw what happened yesterday. A lot of things popped right through. And then, then we'd be looking at a back test. But this will be a strong level of resistance along with the sell orders right behind there. If you want to look at a couple other, RV, LV under the 200, this one came up above the 9. Okay. Yesterday, it's a Revolve group. Again, it's got nice volume. It's up above the 9. Got a little bit of room. You're going to have some resistance at the 50, but you have sell orders here too. So again, wouldn't be my favorite, but it popped up on my screener. And then this one didn't have too much of a big gap up, but you see we got past the 50. We're above the Bollinger Band like we saw a lot yesterday. The oscillators look good. You got some sell orders at 120.98. We closed yesterday at 115. So 115.55. So you got about $4.50 to the upside. Your support would be right here, at the 50 basically in the Bollinger Band. And then one more I'll take a look at is this one's going to take off today, so I don't think you'll be able to get into it. This Coinbase.
Off the charts.
Yeah, I don't even know why it's going up.
It was added to the one of the indices.
Oh, okay, there you go. That'll do it. That'll do it. So if you were in Coinbase, which you could have been, because under the 200, that you're gonna be profiting today. So definitely.
They're replacing Discover Financial on the S&P.
Okay.
So that's a readjustment in all those indexes. Yeah. The research firm I follow, they brought up the other day SITM. They're a California-based company. They're in, it looks like, the microchip world. This is not a swing trade. This is more of an intermediate to long-term idea. Fundamentally, the company I follow likes them. They became a leader in this area of once again, it's an AI semiconductor kind of company. So something that I look at that and I go, okay, there's a pullback needed because it's above the Bollinger Band. But if it holds up on the 200 and you continue to see the 9 in Mark's chart here, the 9, and with the 20 and the 50 go through the 200, you could probably see a a possible long-term opportunity there. So just something to put on your watch list from a long-term perspective, not a swing trading stock perspective.
It's got low volume too, so just be aware of that.
It's definitely one of those more not micro, but close to it, small cap companies. So
Definitely the price isn't though. It's $204. So
no, it isn't.
Yeah.
No, but just something to take a look at. It's something I came across that I thought was interesting from a fundamental perspective and where they're at in their marketplace.
Okay, cool.
Mark,
Yeah.
okay, you're looking Costco. Go ahead.
Here's Costco. Costco doesn't have any resistance, but it's following right along the 9. You can see 3 times in a row. Did wick down to the 20. So again, the 9 the resistance level went away, but you have some sell orders up here at 1,035. So from 1,016, so you got another 16 points, before you would hit some sell orders, or you always got to be aware of the upper Bollinger Band also. Let's go down and look at the oscillators. Good. Okay. So Costco. What's the other one?
I'm showing resistance on Costco at heavy resistance at 1,000. Your green line of death. I don't know why you're not. I show on mine.
Yeah, mine's not showing it.
Mm.
Let me back out to 6 months and see if it goes. Oh, there it is. Okay, yeah. I don't know why it wasn't on my 3 month, but yeah, this has been here 1, 2, 3, 4, 5, 6 days in a row. Yeah. Again, this is a tough one to get past. But once you get past, you could go up to where 1,035, but until it gets past that level, it's in a sustainable manner. We're kind of sideways on Costco.
It's a pretty straight line.
Thanks, Paul. Thanks, Paul, for bringing that up, because I don't know why it didn't come up on my 3 months. Let me go back and see if it comes up again.
It will probably.
There it is. All right. Who knows? Yeah, that's a pretty strong line there. What else we got? Anything, you guys?
Mark, could you check United Healthcare, UNH?
United Health.
7% drop this morning.
Yeah, I was looking at this the other day, and it was right along a support level, if I remember. Oh yeah, here's your sell orders. It was right on support. It's come down. Earnings killed it. It's under the 9. What's happened today, Paul, that it's dropping?
I don't know. I just saw it in the news. It has the headlines going.
There was a news like CEO resigned and like they don't have the direction for next.
No forecast. They told
Oh.
them that they're not. They told the street they're not forecasting.
Wow, this is the 2-year chart. This is bad. It's let's go back 5 years and see if it's even that low in 5 years. Okay, so we'd have to go back all the way to about, oh my gosh, 2021 to get this low on United Health right here.
Yeah.
The CEO is also leaving.
And also, the CEO was shot dead like a few months ago last time. I mean, not CEO, I think maybe. Yeah, they have 2 CEOs, I think. So one of them. And
that's interesting, as United Health, as far as the healthcare industry is just a juggernaut. And now you're seeing what's happening. Let's go to J&J, because that's pretty big too, and just see what J&J is looking like. I'm going to go back 5 years on J&J. Oh, wow, look at that. Talk about some swing trades, guys.
Yeah.
Of course, this is on a daily. Oh, that was a daily chart. It gave me a daily. That's sweet. Wow. So we are down. We're right here. Yeah, we've hit those levels before. So, yeah, man, I have to put that on my real swing trade list. That's a lot of swinging.
Yeah.
Yeah, no kidding. So I didn't get to Patrick. Is Patrick still here? Patrick, what's going on in Europe?
Yeah. Welcome to sunny London. 73 degrees here today.
Gonna be 92 here.
Oh, right. I noticed. I'm just wondering, are all the healthcare companies in the US stocks falling because Trump announced that he was going to reduce the cost of individual drugs between 30 and 90%. That would affect that would affect the profits of companies because their care packages would include drugs used in certain treatments. So it may impact on these companies' profits in the future, maybe.
Definitely. Yeah.
You know, they started off, they all got hit early yesterday, but they bounced back. And I don't know exactly why. I just know that's what happened. Like Lilly came all the way down and came all the way up. Bristol Myers, Beeve, Abbott Lab. The healthcare didn't look good in the morning. I remember that, and then rebounded.
Let's go take a look at, we'll look at the ETF. There's a healthcare ETF. Yeah, under the 9, way under the 200. Yeah, let's go back. We'll go back a year and just see how it's looking. Yeah, we haven't been this low in healthcare since about 2023. So what was the other? Lilly? You said Lilly went down too, came back up. Let's look at Lilly. That's a biggie. Lilly. Yeah, right down to support. Merck. Just off the top of my head, yeah. It's running around support. Pfizer. Pfizer's been just dead too. Yep. And then Moderna's just been flat. Flat. If I remember right. Let's go year to date. Yeah, it's just. Yep. And that's not a good sign here with this 200 just shooting down like it is.
So there was a subtle impact, to answer your question.
Yeah, I mean, we're so news driven. It's so strange. This administration is not sitting on its hands. Things are happening all over the place, whether it's fighting wars, fighting drugs, fighting immigration, whatever it's doing a lot, and it's doing it all at the same time, and it's keeping the press busy, keeping the market busy. It's almost exhausting. Like Trent and I, at the end of the day, Friday, we'll call each other and might have a beer, and I'm like, crap, I'm exhausted,
Yeah.
compared to the last administration.
Well, I think there's a lot of opportunity. I mean, yeah, I get tired too. I got to walk away, but you see, you see clear momentum. I mean, the charts are unlike like a month ago or March. It was very difficult to read the charts. The charts are somewhat easier now.
I have a question. Sorry. So I have a question. Like, I know like market is so volatile. I'm wondering, is it a good idea? I know like they're still waiting on sidelines, or whenever get chances, better to take some swing trade, like, rather than going all in something.
I didn't get the.
My question is like, I know like the market is still volatile and economy, we are not sure it's a good and it's still not good. But the market is like, sometimes with all news based and it's keep going up, especially the tech and like, Max 7 and all those AI related stocks. So is it good idea to enter into market or opportunity of swing trade and like, still look at the sidelines?
It kind of depends on you and your trading plan, and what the chart looks like. There's always somewhere, to find
there's always a bull market somewhere, right, Mark?
Yeah, I mean, I showed you, the ones that we've been in, since last week, like IONQ. This is still we got in back here. You could still be in this, with my trading guidelines. You get in here, and we're up $11.
I think he means like in terms of a long-term investment.
Long-term, yeah, exactly.
Yeah, he's thinking, geez, is it a good time to get into the market? Period.
Well, that depends on what you're looking at too.
Yeah.
I mean, if I'm looking to get back into, let's say, an index, let's just say the SPY, this is the first time we've been above the 200 since, let me go look. Well, we were back a little bit there, but I'm going to go all the way back here since March. Okay. So now we're above it because of this gap. I need to see it test this back on a daily basis. Okay. Before I would consider, that we're out of the woods on the 200 on a daily basis. If I went, in more long term, I would go to the weekly chart. And let me get a couple years on here so it looks different. And I use on the weekly the 50 week, okay? And Trent uses different ones, and you guys can use whatever you want. But here we had the first time in a while that we've been above the 50 week. We'll see where it closes because this is a weekly chart, so it won't close until Friday after close. But if this stays above that, a lot of time that's a signal for people to say, okay, we're above the 50. And if you go back and look at the 50 week, you can see you get in here, you're still in. That was a long time before you got out here. That you look at it weekly. So a lot of people use the 50 week, or some of them people use the 20 week, but I would use the 50 on a weekly basis, and that would have got you in and got you some nice. Let's just say you got in here. It was at 434.69. You got out here, 582.99. Okay, and that's just on an index. So I'm starting to see, we're getting closer. But now it gets into what's your trading plan and what's your investment plan, what's your risk level, what's your level of risk management. Again, we're popping up because of this news on tariffs. Tariffs has been the catalyst, but the other news out there is still the economy. Okay, we were talking today, Trent and I, Nissan just laid off another 10% of their workforce. They have 135,000 employees. So we're not seeing the strength. We're looking at the housing market. We're looking at credit card debt, so always keep that in the back of your mind that, this market right now is playing off whatever the trade, the tariff deal is going. Once the tariff deal gets settled out, where are we going to end up?
Yeah. Something to take into account. This came up on, I saw it in X this morning about the 3-month U.S. Treasury yield. It's made a pretty substantial move today. Let me see if I can pull it up here for you. And you think about like yields and relate them to financing. And I think Bassett came out today or yesterday or yesterday or today and said and asked, Congress to temporarily remove the debt ceiling limit. And the reason is because yields are not going in the direction that they had hoped that we saw back in March, April, when 10-year yield got down around 3.8. Today it's hovering right up against 4.5. Well, with all that debt they have to refinance, that's a really big hurdle that they got to get through. And so they're sort of in a time crunch to get it done. And with in this case, the 3-month yield, see if I can find it here. Here we go. 3-month government bond yield. I'll share this with you. Let me just clean up my chart here so you don't get sick. This is sort of, in a way, in my opinion, a little concerning. So this is the United States 3-month government bond yield. This is today up 1.41%. So if you're refinancing debt and you're rolling debt every, say, 30 days or every 3 months or even every, in this case, 5 years, we're up against a lot of corporations have 5-year debt they have to refinance this year. They're having to refinance this at a higher rate. And this also translates into, personally, like the housing market. I saw an Unusual Whales post this morning about how sellers of homes are getting desperate to move their homes. So they're actually you're starting to see a wave of lowering prices, and in some cases lowering below what they originally bought them for. And so this is a part of that market that's really uncertain. And I was thinking about it and I thought, you got the stock market, and that's not the economy. We've talked about that before, but the bond market is the economy. It is the forward thinker of what is really globally happening. And could be interpreted from the point of view of, is there a lack of confidence in our economic recovery? Is there a lack of confidence in our administration? These are all, questions I think that bond market is asking right now. But that's not the stock market. Stock market is, where can we go make money? It's the casino in a sense, on a more of a less than an intermediate term period of time. So some to take into account here is what's happening in the bond market. I mean, that's in one day we moved from a low of 4.32% to a close of what's that, 3.8%, and today we're at 3.8%. So that's a substantial move in just in a 3-month in a bond. So something to take into account when it comes to your risk management. Would I be buying bonds today? No, because the value of bond values are falling because of what we're seeing here. So something to think about.
Just one thing about the S&P 500. I asked ChatGPT what would be a fair PE ratio for the S&P 500, and it said at the moment it should be 17, and the actual value at the moment is 21.5, and so the difference is 26.5%, which is the overvaluation of the S&P at the moment, and that corresponds with the projected fall due to Kerry's QQQ figure a month ago. So they both tie together exactly about the fall that is expected.
Interesting.
Got a question from Troy. Get to. I know the market's open. He's asking about Berkshire Hathaway, and I've had Berkshire for a long time, and I put this story out on the market news this morning of Berkshire. Okay. The Berkshire Hathaway balance sheet just hit another historic milestone. As of March 31st, conglomerate led by Chairman Warren Buffett now holds $347 billion in highly liquid assets, a combination of $28.3 billion in cash, a staggering $314 billion in short-term U.S. Treasuries, along with $5.3 billion in cash from its regulated businesses like Burlington Northern and Berkshire Hathaway Energy. It's larger than the GDP of over 100 countries, including Finland, Portugal, and the Czech Republic. This total, quietly detailed in the firm's latest Q1 release, underscores not only company's legendary conservatism, but also the scale which Berkshire now operates, effectively functioning more like a sovereign wealth fund than a traditional holding company. Berkshire could purchase over 95% of the companies in the S&P index. Of the 503 companies currently in the S&P, there are only 24 he couldn't purchase outright with cash and still have money left over based on market cap. This includes buying the entirety of Bank of America, nearly 3 BlackRocks, 4.5 Airbnbs, 10 Kraft Heinz's, or 24 Best Buys. Berkshire controls more short-term treasuries than the U.S. Federal Reserve, which holds roughly $195 billion in T-bills, making Buffett's conglomerate the largest non-government holder of short-term U.S. debt. For me, who wouldn't want to hold a company that has that? I mean, for me personally. Now, I have a long-term holding in that, and that's why. Over his 60 years, Warren Buffett, and again, it's no, past performance doesn't mean it's going to happen. He averaged about 20% a year. Okay, not bad, for a value investor. So those kind of companies are what I like to look at long-term. And so when you look at when am I going to get in to a long-term company, let me take a look here. Let's go to Berkshire B. I mean, on a daily chart, I wouldn't, you're over the 200. Okay. As long as you're over the 200 on a daily chart, Paul Tudor Jones, he's happy with that. So it just depends on where you want to go and how long you're going to hold this. If you believe this company is going to dump for some reason, with all the assets that it currently holds, then I think if this company dumped, you're going to see a lot more companies dump before this one ever would, because if the U.S. got into trouble financially, this is where they're going to go. They always say, you can always tell when there's an issue in the economy because all the planes start landing at Eppley Airport in Omaha, Nebraska, as they go visit Warren Buffett looking for money to survive. So On this one, you're over the 200. If we go back 5 years on this chart, I mean, you've been over the 200 since 2022. I mean, so again, we're close to all-time highs up here. So when to get in? I mean, it's really up to you on your trading plan, but you got to go back on long terms and say, why am I in this? What makes this company best? In trading, I don't care really that much about that. I look at the charts. In investments, I look at the company. So I get into more fundamentals like Kerry would probably do. For ITOT, again, looks just like the S&P. We just had a day over the 200, and today we're over the 200 again. Got an upper Bollinger Band. So if you're a Paul Tudor Jones kind of guy, Paul Tudor Jones would say, okay, maybe I would get back into an ITOT, not investment advice. Maybe I get back in using his metrics. If we go to a weekly, and go to the weekly of the ITOT, yeah, this is my favorite. This holds 2,600 stocks, so just about every stock in the U.S. So here we got 1 week. Okay, we're back above the 50. So I would want to see this remain above this and close above this by the end of this week. Before that would give me confidence to say I would start thinking about putting more money back into IT&T. Again, not financial advice, but that's how I would use the chart on a long term to go look at things like ITOT and or Berkshire Hathaway. Did I answer your question, TL, Troy? I think he's still there. I hope he's there.
Yep.
Oh, there he is.
Thanks, Mark. I appreciate that.
Yeah, Berkshire has just been one of my top companies forever, and I just can't beat the results, but where you get in, it matters. I understand that. But how long you hold it also matters too.
Yeah, I have about a 5-year horizon. So, I feel like now may not be a bad time for Berkshire. It did draw back a little bit after the announcement of Warren Buffett leaving or whatever. So it might be a good time to dip in.
Yeah, he's still around. And, if you're 5 years, he may still be around in 5 years, as many cherry Cokes as he drinks.
He's well preserved.
Yes. Yes. Definitely. Anything else? Let me see. Okay, I think we got the chat taken care of, Trent.
All right. Well, just one last thing. Today is my sister's birthday. She's no longer with us, and I just want to say happy birthday to her. She was a very inspiring human being. She had, forgive my language, but a set of balls that was unchallengeable. She would challenge anybody. She lived the way she lived in a very positive way. It's very helpful, but she knew the value of being alive. And so I really appreciate you all being a part of my life and being an inspiration to me and being a better person each day. So thank you for showing up. Thank you for supporting Best of US, Kerry, myself, and Mark. And thank you all. And I hope you have a wonderful, wonderful day today and a wonderful week.
Yeah, thanks. And we wish you, sister, too, happy birthday, Trent. And hope, today is May 13th. Yeah, tomorrow is my birthday, actually. Okay. Yeah.
Oh, yay. All right.
Hey, happy birthday.
Thank you. And
we'll bring virtual cakes tomorrow.
Yeah. If you have a minute, I'm still discovered. I'm lost it. I don't know. It's opening it, but I don't see all the messages. If you have a minute, I can share my screen and
okay. Yeah, I can help you out on that. So we'll call it there. I'm gonna help out with the Discord issue we're having here. If you all want to drop off, it's great. And we'll go from there. Cool. Have a great week.
See you guys.
Thanks,
day.
Guys. Thanks.
Yeah.